Question number 6, page number 12. Okay. So in institute study material, the same problem is there, no? Question number 14. Practice manual, question number 14. Now we will try this problem. We will go through this problem. Angle, bolt and canopy, ABC. So parent company is holding some quantity of shares even in sub-subsidiary, like Arun Brown Crown problem. Here also they have some holding. Then all shares were acquired on 1st of July. 31st of December 2011 is the date of balance sheet. Acquisition of shares had happened 1.5 years before, not 6 months before. They mentioned that the balances by 1st of January 2010, 2 years before balance they have given. Each company declared a dividend in the year 2011 on its shares out of the profit for the year 2010. In the year 2011, they are declaring dividend for the year 2010, understandable only. First 6 months period of dividend is pre-acquisition, last 6 months period dividend is post-acquisition. But let's know as whether they had adequate amount of profit. In one of the earlier problems you have seen, post-acquisition period dividend was paid out of pre-acquisition profits. Increase in reserves took place only in the year 2010. Then some mutual owings that you have, stock of Bold Limited for goods purchased from Angle Limited. Angle Limited invoiced at cost plus 20%. So you understand that it is a downstream sales. Now, as we discuss, we will develop a lot of doubts. That point of time we will take it up. So now we will start this discussion of this way. Cut off. Angle in bolt, angle in canopy, then bolt in canopy. Date of acquisition is (1710). Date of consolidation 31/12/11. So prior to would mean first 6 months of year 2010. Post acquisition will be second 6 months of year 2010 and 12 months of year 2011. Correct. Percentage of holding. So A and B 7,500 shares upon 10,000 shares, 75%. A and C 1,000 shares upon 6,000 shares, 16 and 2/3%. Then B and C 3,500 shares upon 6,000. How much it works out to? 58 and 1/3%. Both put together 75%. Minority interest 25% each. Like Arun Brown Crown problem. Classification. Firstly, we will take up the last subsidiary, CANOPY. So I would like all of you to just make note later. CANOPY. General reserve of C 75,000. Correct? What is 1110 balance? General reserve balance 110, 1 by that 1110 balance being 50,000. So for the year 10 and 11, increase would be 25,000. They mentioned very clearly in the problem that increase in reserves took place only in the year 2010. Correct, no? 2010 and 2011. Here this is nil, this is 25,000. Correct. This we are taking it up as first half and second half 12,500 each. 62,500 capital profit. This being revenue reserve. Correct. So no increase took place in the year 2011. Profit and loss account of C. Profit and loss account of C, how much it comes to? 2,50,000. One 10 balance 30,000. Given in the problem, no? Profit earned, that means the remaining amount is so this is 10 and 11 together 2,20,000. Of this you may consider the profit earned as 1 lakh, but dividend of 10% we have got to deduct. So here it is 1 lakh minus the dividend at the rate of 10% on 6 lakhs. So only 40,000 will be there. Am I right? So 6 lakhs on which 10% working out to 60,000, that we deduct from that particular balance, and what you get is 40,000 only. That is of 2010. 2011 will be 1,80,000. Are you understanding? This 40 will be divided as first and second 6 months period. 20,000 each. These two will be 50,000 capital profit. 2 lakhs will be revenue profit. Are you understanding? Yes or no? This is over. Then general reserve of B. Today it is 1,25,000 by 1110 and 1011. It was 1 lakh and 25,000 is the balancing figure. This figure you can attribute for 2010 and 11. This being nil and 25,000 as increase that took place in the first year. This will be subclassified first 6 months and second 6 months with 12,500 each. One lakh 12,500. This is revenue reserve. This is capital profit. Correct? Understood? Then profit and loss account of B, how much? 2,75,000. Mistake what they have done, we have to rectify. Pre-acquisition dividend. ஒரே நிமிஷம். See, we have got to go back to profit and loss account of see, there a small there is adjustment that we have to carry out. In the 25,000 rupees, again vandhathu, I am going back to CANOPY. 25,000, where from we are just getting? So this 25,000 rupees increase in general reserve has happened as an appropriation from your P&L account that we have forgotten to reduce. So what we have to do is, அங்க வந்து ஒரு 25,000 rupees reduce பண்ணணும். Minus 25,000 we got to reduce. This is for dividend, this is for general reserve. So therefore this figure is how much? 15,000. If this is 15,000, then out of 2,20,000, this becomes 2,0205. அதனால தான் சொன்னேன் உங்களுக்கு காப்பி பண்ணணும். 2,05,000. Are you understanding? This is general reserve. This sort of problem we have not handled so far. அது மாறும், ஒவ்வொன்றா மாறும். This is $7,500, 37,500, then 2,12,500. Say total will be 2,50,000. But this general reserve, say when I am just doing it for subsidiary company, then I have just understood that we have missed out this. Are you understanding? Are you understanding? So this item is clear. Now we have got to be little more careful in handling this particular issue. So firstly I will take up இதே மாதிரி last problem இன்னும் கொஞ்சம் redefine பண்ணலாம். Even more you can bring out a sharper answer. Profit and loss account of B Limited 2,75,000. Dividend from C. How much is the dividend that they would have received? How much is the dividend that they have declared for the last year? 10% on 10% on 6 lakhs into 58 and 1/3%. 58 or 53? How much is that? $35,000. Correct? Are you understanding? இதில் ரெண்டா பிரிக்கணும். Pre-acquisition, post-acquisition. இப்படி தான் நம்ம போன ப்ராப்ளம் போட்டிருக்கணும். போட்டிருந்தா இன்னும் ஷார்ப்பராக ஆன்சர் வந்திருக்கும். No problem. We will just recast the previous one this way. Pre-acquisition and post-acquisition. How much is pre-acquisition? Half of that, 17,500, and this being 17,500. Right? Then if you eliminate 35,000, this is going to be 2,40,000 out of 275. If this is 35,000 what they have received as dividend, Of their own, they have received only 2,40,000. In them, you have 1110 figure. 1110 figure below. Negative 50,000. So, how much is the profit of year number 10 and year number 11? 2,90,000. How much of that is related to the year 2010? 2,50,000 minus 10% on their capital. How much is their then capital? 10 lakhs. Correct? Minus the transfer to general reserve. How much is the transfer to general reserve? 25,000. Are you understanding what is just going on? So 1 lakh and 1,25,000, lakh and 25,000, and this being 1 lakh and 65,000. This will further be divided into two, first and second. 62,500, 62,500. What items you will take it up for post and pre? So now for pre-acquisition, what items we will take up is opening balance 1110, 50,000. First 6 months of 2010, how much? 62,500. Only these two balances we will take up. How much is that? 12,500. Post. What and all you will take up for post? What and all you will take up for post? For post, you will be taking up second 6 months of 2010, 62,500. So 2011 balance of 1,65,000. Then post acquisition dividend of 17,500. How much is the total? 62,500 plus 1,65,000 plus 17,500. 2,45,000. What is the total of these two? 2,45,000 plus 12,500. How much is that? 2,57,500, which is nothing but 2,75,000 minus 17,500 towards pre-acquisition dividend. Are you understanding, all of you? This much. In fact, I would just say that Arun Brown Crown Limited, if you attempt the same answer, you will be getting of what institute had just given. That sharper answer you can bring out. But anyway, we are just doing it further on to this angle bolt and canopy. Are you clear about this one? Then pre-acquisition dividend received by A from B and C, which they got to rectify there. So what B had received from C, we have rectified. Now what A received from B and C, we have got to rectify. So how much is that? 10% into 10 lakhs into 6 by 12 into their percentage of holding. Their percentage of holding is 75%. Is that right? Correct. Then 10% into 6 lakhs into 6 by 12 into 16 and 2 by 3%. Understood? Say sir, no? Pre-acquisition dividend received by B from C, we have rectified 17,500. We have rectified in P&L account. We have to rectify in investments account. Are you understanding? Now, we will take up on to chart. Do you have any stock reserve? I think so. We do have one stock reserve. Stock reserve. Stock at transfer price 18,000. Markup 1/6 on transfer price. Markup is 3,000. Type is downstream. Are you understanding? Now we are going to develop that chart. So it is bolt in canopy. Bolt in canopy. Right. Date of acquisition, date of consolidation, revenue reserve, revenue profit. Here we are using direct method only. Indirect method also I will do. Equity, share capital, general reserve, profit and loss account. How much is that? 6,75,000, 2,50,000. 6 lakhs general reserve 62,500. Profit and loss account, how much? 37,500. Seven lakhs, 9,25,000 dash 12,500 dash 2,12,500. Percentage of holding 75, 25, 16 and 2/3, 58 and 1/3, 16 and 2/3, 58 and 1/3. Then net worth 7 lakhs into 0.75, 5,25,000, 231, 250, 2083, 7292, 35,417, 123, 958. Space constraint. Odd figures are there. Investments by A in C. A in C. How much is that? 1,50,000. Pre-acquisition dividend. Pre-acquisition dividend. What they have received is 5,000. 1,45,000. That 5,000 rupees to be deducted from here. Correct? Then B in C. B in C. How much is that? 5,20,000. Pre-acquisition dividend. This we have rectified in P&L account, not in investments account. That we have to take up. How much is that? 17,500. 502 500. Both put together 1,45,000 plus 502 500. Both put together 6,47,500. So for this we have already rectified. Minus 5,25,000. This would result in a goodwill of 122 500. 122 500. Are you understanding? Then carry forward to next template. 122 500, 231 250, 2083 and 30,470. Carried forward to CFS. This is next template dash 7292 123 958. This is getting over. A in B. DOA, DOC, RR and RP. Are you understanding? Equity share capital, general reserve, profit and loss account, share of revenue reserve and revenue profit. How much is the figure that we are going to take up? 10 lakhs. 10 lakhs. General reserve 1,25,000. Profit and loss account 257,500. Remember 2,75,000 minus 17,500. Correct? So general reserve evlo 112,500. P&L account how much? Remember we have just taken up 12,500. Remember that? Are you understanding? Seven two nine two 123 958 dash 257,500 minus 12,500. 2,45,000. 7292 dash 123 958. Total panamo 10 lakhs plus 1 lakh 12,500 plus 12,500. 11 lakh 25,000. 10 lakhs plus 1 lakh 25,000 plus 257,500 plus 7292 plus 123 958. 15 13 750. 12,500 plus 7292 19,792 24,500 plus 123 958. 148 458. Percentage 75 25 na okay. 378,438. 197792 into 0.75. 276,719. Investments. என்னாச்சு? என்னாச்சு? 'A in B எவ்வளோ? 9 lakhs. Pre-acquisition. 37,500. $8,62,500. Goodwill 18. Brought forward. மேலே கொண்டு வரணும். Goodwill 122,500. 231,250. 2083. 30,417. That is CFS. $2 lakh and 5 lakh. அவன் ரெண்டுமே indirect methodல போட்டா மேட்ச் ஆகாது. See, we are doing direct method and indirect method. Direct method for capital profit, indirect method for revenue reserve and revenue profit. If both were tried under indirect method, answers may not agree as far as goodwill and consolidated reserve, goodwill and minority interest. CFS. அவன் ரெண்டுமே indirect method போட்டிருக்கான் அந்த ப்ராப்ளத்தில், ஞாபகம் எனக்கு. Plus 122,500. How much? 141,250. 378,438 plus 231,250. 609,688. 14,844 plus 2083 plus 2 lakhs. 216,927. 276,719 minus 37,500 plus 30,417 plus 5 lakhs. 769,636 plus 216,927 986,563. நம்ம செக் பண்ணி பார்ப்போம். அந்த ஸ்டாக் ரிசர்வ் டிடக்ட் பண்ணல, ஒரு ஸ்டாக் ரிசர்வ் இருக்குல்ல. ஸோ how much is that? 3,000 rupees. Stock reserve. $983,563. Minority interest and goodwill will not agree. Goodwill will not agree. We can just do that. So what is minority interest? 624. Here it is 609. So here it is goodwill. Already goodwill irukanga. Irukku. See, The goodwill, you people have not taken up that at all. How much is the goodwill? Huge goodwill you have. 2 lakh 50, 5 lakh 80, 4 lakh 50. So 12 lakh 80. 12 lakh 80. So 12 lakh 80,000 plus 141 250. So it is 1421 250. What is the number that they have? 1435 833. Now that cross verification I was just referring about, no? If you put that cross verification, it will automatically agree. Difference ever over on 8 either side. Yeah. This difference, how much you get minority interest? 624 271 minus our number of 609 688 14,583. Same difference you will be getting. Now we can cross verify. So when you are in the top of one roof, you can jump into another roof just like that. You don't have to climb down and go up. How do we verify? I told you a shortcut, no? Did I tell you that? Yes. So I will do that. So 609 688 plus what is it we should take up? The share of capital profit. Capital profit in general reserve. How much is the capital profit? General reserve. You have capital profit both in general reserve as well as in revenue reserve. That is general reserve as well as P&L account. How much is that? 62 500. We'll take up one by one. $62 500 into, that is what percentage we have to take up? Subsidiaries holding in sub-subsidiary into 58 and 1 by 3 percentage into minority interest of this particular company plus in profit and loss account how much you have? In profit and loss account how much you have? 37,500. 37,500 into 58 and 1 by 3 percentage into 25 percentage. You should get institute answer. 62,500 into 35 divided by 60 divided by 4. Then 37,500 into 35 divided by 60 divided by 4. This comes to 606 688. 624 271 crore. In institute, they have just got this number. So that much of increase that you make in your minority interest, that much of increase you have got to make it in goodwill. So what is our goodwill? 1421 250 plus this computation should give their number 1435 833. Are you clear?